Hello everyone, this is Evan here from the Trade Risk on Friday, September 16th with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then run through just a few names to finish off the week. And before we get started, I want to remind everyone once again that I'm hosting a webinar next Thursday. If you head to thetraderisk.com/webinar, you'll be at this page here. Drop your email and you will be signed up for this event. It's completely free. We're going to be covering our favorite trade setup. So if you're someone that watches these videos often, you see me analyze charts. In this webinar, I'm going to be going over what I look for in an actual trade, the actual criteria, entry, exit, trade management, all the good stuff that everyone likes to know. That's what we'll be covering there Thursday, September 22nd, 1 p.m. Eastern. If you can't make the event, still drop your email in there. I will send you a recording a day or two after. So hope to see everyone there for that. That's September 22nd. You can head to thetraderisk.com/webinar or click this link top right hand corner that should be appearing right now. That will send you to the page and not disrupt this video. So let's get into markets now. The week is over. We actually finished up on the week. I know it may not seem it because there was so much back and forth, but we did finish up in the S&P 500, just a bit over 0.5%, IWM about 0.5%, and the NASDAQ, the NASDAQ 100, the Qs up 2.63%. Technology was very strong this week. That would largely, due in part from Apple's gains. But let's get back to the S&P 500 first. So first things first, if we look at the SPY here. First thing to notice is that we went ex-dividend on Friday. So this chart does look a bit more bearish than it otherwise should. We didn't really close on those lows. Those pink arrows that I drew right in here, 214.40 or 214.50 or so, that's actually where we closed on the day. If you go to the cash market, you can see that reflected. Again, that was $1.08 dividend that went off on this Friday. So with that in mind, the levels and ranges and range that we're in here is still pretty clear. Now, to the point of the dividend though, and the skewing this chart a bit, it is still, this 212.50 level is still, very important, right? The machines are still going to look for previous day's lows, and this is still going to be a key reference point, even though we're not technically right there. Charts again will eventually adjust, all that good stuff as we do this many times a year, 4 times a year on this ex-dividend. But the point is 212.50, that's certainly a line in the sand on the downside. 215.50, it's basically where we stalled out on Thursday, is where we want to pay attention to. On the cash market, that's 21.20 and 21.50. That's basically the range that we've been in, and that's what we need to keep our eye on. We're at near the top end of it. Again, we finished positive on the week, so that is constructive. But notice the 8 and 20 period EMAs still bearishly aligned, heading down. That shows momentum is still favoring the bears, the sellers. So it's still, even though the bulls have clearly stabilized us here at this 21.20 level, that is, constructive. You still have to respect that we did have that big breakdown on Friday, and we haven't yet recovered, more than about 40 or 50% of it. So just keep that in mind. It's still a bit of a tug of war here. And again, we have the Fed decision on interest rates next week, next Tuesday, Wednesday, I believe. Wednesday's the actual day where we'll get the latest from the Fed on whether or not interest rates are going to go up, down, stay the same. That's going to be, generally going to lead to a volatile day, even a potential run up into that event. Maybe buy the rumor, sell the news. Perhaps we sell off into the event heading into next week. Monday, Tuesday, we start selling off and recover. There's a million ways you can kind of cut it. The point is, we're still at sort of a crossroads, vulnerable section here, area in the market, and you just want to, plan for that accordingly and adjust for all of that heading into next week. So levels there are pretty clear. We covered that. Weekly chart, again, we saw gains this week. Oh yeah, and the one last note with the weekly chart is, look where, and again, we'll go back to the cash market just because it's a little cleaner right now, but we found support exactly where we would want to find it, right? We found this at least initial stall, or this initial bounce, right at the previous 2015 all-time highs. That's where the dip buyers stepped in. That's holding so far. So once again, depending on your time frame, everything could be, green light good for you still if you're a longer term holder. Again, the more active trader is going to be maybe dabbling in this volatility and adjusting accordingly. So that should do it here on the S&P 500. Let's go to the IWM. You can see also finished higher, about 0.5% on the week. Still 8 and 20 are curled lower here. Bearish alignment. You can see we're up towards the top end of this range here at 122, and we'd have to really kind of get back above these moving averages and then perhaps back above and reclaiming this trend line to get kind of the strength, momentum, the bulls back firmly in control. That's what we need to see there on the downside. This 120 level is still holding, and for the NASDAQ 100, we are less than 0.5% away from its highs here from previously. So this is right back to kind of the bull market mode, grind higher. 8 and 20, it's above, prices above the 8 and 20 period. So things are looking good here. Once again, Apple playing a big weighting in this, but technology in general, other names just the same have been doing their fair share of work here, keeping this market up. So very constructive action here in the Qs. Now heading into some of the other names, TLT, let's start there, some of the other markets. Seeing a bit of a recovery here on the end of the week. 81 basis points, closed higher on Friday, but still down 57 basis points on the week. So we continued kind of pushing lower here overall on the week. 8 and 20, bearish momentum to the downside now. And we're going to see if we can try and stabilize this 133 level. So we made this low on Tuesday, and then we undercut it and then closed above it on Thursday. So maybe, this was getting a little bit stretched here. We got the follow through bounce on Friday higher. Now we need to see how this acts heading into next week. Again, very, very closely tied to the Fed's decision out on Wednesday of next week. So expect this to be in play and volatile. And we'll have to keep a good eye on that one next week. But certainly, again, tough to pick a large position here ahead of that. Gold continues to sort of consolidate, but it is getting pretty vulnerable. It's at multi-month lows at this point, and we do need to see if buyers can step in at this nice round 125 level. This is where they stepped in right to kick off September here. So we're back at these levels. Could potentially be a nice spot to bounce back to the top end of this range, but we don't really see too much evidence of that just yet. And silver also continues to sort of consolidate here. Both metals going quiet. That's good. That's sets us up for some future expansion in range. That's what I like to see. So keep an eye on these as they continue to consolidate, and we'll see how they act heading into next week. USO back to the lows, actually undercutting the lows briefly from September 1st this morning, but then closing right at this $10 level. So this will be interesting to see if we continue to leg lower, maybe retest the August lows, or do we find the support here? Again, just consolidating. Not too much else to really act on in USO right now. Sellers are in control in the short term. Natural gas, a little more actionable. This is one that's looking like it wants to get going again, breaking out. We're back in here long UNG. We were long UNG back here on this, on this day right here. And we did manage to sell out near the highs here, and now we're back involved, waiting to see if we can kind of get a push higher, follow through next week. Had a nice close out the week and end on Friday. If you go to the weekly chart here, you can see we've been consolidating since July, and it looks like it's now trying to get going again. Highest close on the week since July 1st. So a little bit of constructive action there. We'll have to see if that can continue into next week. Again, we are long UNG into the weekend. Now let's hit some of these sectors. Not much has changed, right? Semiconductors continue. I mean, look, they actually gapped to all-time highs earlier on Friday. They didn't quite hold on to it, but still very, very, very strong there. Continues to be the leadership group in a lot of those underlying names. Again, technology, once again, strong as well. Finished off 78 basis points on Friday, but still relative to the rest of the market, look how close it is to its previous highs, really recovered all of this brief damage here, and then is already back near highs. That's constructive, and biotech continues to be very strong here as well. You could see weekly chart up 4.5% on the IBB. XBI equal weighted index also up 5.65%. Very strong in both of these. This is a sector that we are long as well. On the downside, XLF now trading off for a few days, actually now getting a little concerning here as the financials start to trade down, maybe already pricing in that this rate hike isn't going to occur. Maybe there's something else there. Of course, there's all the Wells Fargo news. So there's a few different things that maybe could be influencing this, but weekly chart down 1.75% on the financials. So I think this is one of the biggest losers. That's a little bit concerning. Energy also pretty concerning. 3.23% drag on this week. So clearly back below this breakout level of 69.50, and it is sort of heading lower here underneath all of this recent supply. So energy, financials, and then materials also. These three are sort of the dogs here, all pretty weak overall relative to the rest of the sectors. If we cover some of the individual names, we'll just do a few here because not much has changed since our last video. I'm going to put out a handful of trade ideas in a blog post, so that's going to be separate to this video. Keep an eye out for that. But Apple, once again here, look at this weekly bar that we put in, 11% to the upside, just truly a hell of an engulfing bar here over the last few weeks. Action, nice stand by the bulls, right? Clearly getting momentum back in this name. So Apple looking strong. Amazon also one that had a nice move on Friday, up 1.15%, holding on to this trend line of support. If you're a bull, you can trail your low or put your low underneath these recent lows here, and it is still holding on, grinding higher, close to its previous highs. Facebook just the same here, also just staying very, very resilient. All of these names looking real good. Alibaba, look at this, already taking out last week's highs, back above 104. That's very encouraging. Twitter had a nice session today. Of course, it streamed the NFL Thursday night game. That was a success. No hiccups there. Again, getting back above 1880. That's the area more or less where I wanted to see it get back above. Now, what would be very encouraging for Twitter is if Monday we can just come out of the gate and continue this momentum higher. Don't fall back here. Don't come back in and fill this gap. Don't trade back down here. Just keep going with this momentum. That'd be very encouraging. That's certainly what the bulls would want to see there. So Twitter looks pretty actionable so long as it can stay above that $19 area, and we'll end it there. Actually, we'll cover Tesla because it had a nice session, 2.5%. Didn't change much in this technical picture. 820 still lower, but it is trying to put in a bottom here at this 195 area under this $200 level. So that is constructive. Still certainly not out of the woods yet. Has some damage to repair, but Tesla, encouraging session here on Friday. So that is it for this weekend's video. Once again, check out the webinar, traderisk.com/webinar. Come check that out. Next Thursday is the event. Hope to see you guys there. Have a great weekend. Thank you for watching.